Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Neil Sheppard, who's head of derivatives at Gemini. Neil, great to have you on the show.
It's great to be here, and I appreciate the opportunity to talk about at least a few things crypto, if not all things.
For sure. I'm excited about the things you guys are doing on the Gemini side. I've interviewed Tyler and Cameron a couple of years back, and certainly been a user of the platform for a while. But let's start with your background. Where are you from and where'd you grow up?
Sure. So I'm English. I grew up sort of rural part of the UK, northwest part of the UK. I guess closest big cities would be Manchester and Liverpool. So that's where I was. Although most of my professional career I've spent outside of the UK. So I had the pleasure of living and working in London, Tokyo, Hong Kong, and now I'm in Sydney, Australia.
Wow, you've gotten to tour the world a bit.
Yeah, I think, to be honest, like this concept of global citizenship is becoming easier and easier. My wife's Australian. My kids were born in Japan. They effectively grew up in Hong Kong. They're now at school here in Sydney, and but my family is all back in the UK. So we have an interesting array of accents, an interesting array of saying different things, but we all kind of get on at the same time.
And tell us about your professional background. What did you do before working at Gemini?
Yeah, so by academic training, I'm an aeronautical engineer. So that's what I studied. But I was taken with the concept of capital markets during my time at university, and eventually moved into working in London for an investment bank in London, and effectively did that for almost 20 years prior to stepping into the crypto space. So that's what gave me the opportunity to work in those major financial centers around the world. And most of that time, almost exclusively all of that time, was spent looking in the derivative space, either equity or credit derivatives. So my background is, I guess, institutional finance, risk management and trading within the sort of the derivatives landscape.
And what was your first encounter with Bitcoin and crypto? I'm always curious as to everyone's first encounter, as it's still, a relatively new asset class. Sometimes people hear it on the news, or a friend told them about it, or they read about it on a forum. What was your first encounter?
Yeah, so mine was an interesting one. So I sat on a trading floor in Hong Kong a few years ago now, and we had some of the more junior guys on the desk talking about it and investing in it, and as a sort of a hardened, I guess, institutional finance veteran, it was something that was more of an annoyance to me, that why they weren't talking about what we wanted them to be talking about. And they continue to do this. Now, needless to say, at least one of those people no longer works and enjoys a life kind of skiing and mountain biking and hiking around. So maybe I should have listened more then and gotten less annoyed about what we were trying to do in the short term. But I never really had the same maybe eureka or aha moment that a lot of people had. I was sort of a skeptic. So I'm a converted skeptic, which I think in some ways adds to an interesting element to the discussions we have a lot internally. And at a number of the places, a number of the times I speak, and a number of times we talk, and the people I'm engaging with, it's taken me a long time to sort of commit. And more broadly, I've done it at a digital asset level rather than specifically at the cryptocurrency. I see cryptocurrency as a subset of digital assets. I see the technology as being exciting, and the opportunity that presents, not just within the cryptocurrency space. So I always find it interesting to meet people who are where I was, and then those people who never even had to go through the process I went through, because for them it was far more of that sort of instantaneous decision to want to sort of commit and support the process.
Well, Neil, you're not alone, because even Larry Fink at BlackRock once said Bitcoin is a scheme for money laundering, and now he's totally gets it. And you still have your naysayers like your Warren Buffett and these guys, saying rat poison squared and things like that. So everybody, I guess, makes their journey to understanding and getting educated and learning about it, right?
Yeah, and I think what's interesting is, when you think about what ultimately will drive the supply-demand dynamic is it's the same voices that are constantly saying no. It's very rare you find someone who says, I was fully committed to cryptocurrency and now I'm not. You only seem to get the other side where people have spent the time, done the due diligence, understood the concepts, and understood the parts that relate to them and how they see it working within their sphere of life, who then say, okay, now I get it. Not everyone's going to be, Bitcoin is for all people, for all things.
Sure.
And so when you think about, what's going to drive adoption rates and what's going to drive supply demand dynamic and what's going to drive market engagement, like every single day, the news story isn't, I used to like it and now I don't. The news story is, here's someone else who's slowly coming around to, okay, I can see how it works for me and the people that I'm representing. And I think that's kind of part of the evolution. And part of what's interesting about the sort of the space is that slowly but surely, you're kind of building that critical mass and the snowball is getting ever bigger.
Yeah, absolutely. And it's amazing to see the folks who, if you want to say capitulated, the folks who are very against it and now they're here. And it seems like we've entered a new era of institutional adoption. I mean, what I mentioned, BlackRock, and then you have Fidelity and so many Wall Street TradFi giants entering. Everybody wants a Bitcoin spot ETF. Some are even launching crypto exchanges. What are your thoughts about that and how so many of these folks are here? It seems like something just clicked about a few months ago where BlackRock opened the floodgates.
So I'd say there'll be a commercial driver behind some of those decisions. Naturally, they'll be doing it because they have customer demand for it.
Right.
Now, ultimately, if they have customer demand for it, that gives you a good eye into, or a good read into, what their underlying customer base is asking of them as a service provider. I wouldn't imagine it was because there was a fundamental shift in the sort of the strategic leadership about, the benefits of Bitcoin or the benefits of crypto as a sort of a blanket statement, but more our customers are asking for us to provide this as a service, therefore we need to do so. And there's a commercial opportunity for us to get involved here. Now, what I would say, so if I go back to working in traditional finance on the trading floor and running a trading book for a particular product, if a new market participant came along and generally looked at sort of trying to gain some market share, it would be a bit of a concern because ultimately sort of the pie was fixed and it was being split by a number of different participants who were able to service the customer base that was providing that sort of revenue pool, if you like, for that service. And if a new customer came in, the sort of concern was, well, how's that going to negatively impact my customer share, my market share, and ultimately my revenue? However, in the crypto space, I see it quite differently. And even when, one of the first sort of looking back at DBS in Singapore, when they announced that they were going to do something, that's great for the industry because the pie is getting so much bigger because so many more customers have access to the product. So I'm pleased to see TradFi companies and bigger institutions want to come and get involved in the space. If that opens, firstly, that's an indication of their customer base wanting it. And secondly, that opens it up to significantly more people. Now, ultimately, they might see that their TradFi solution might well work for them. But that TradFi solution, if I look at what DBS originally did, was a Monday to Friday, a 9 to 5, or not even 9 to 5. That's not necessarily how the crypto market works. And then you start to get more comfortable with the way the market works. And maybe you want to look at something a little bit more crypto native or something that offers a broader range of products and opportunities. But getting more and more people just engaged in the product is, to me, the first step of, again, building that kind of adoption, building that engagement, and ultimately, continuing to push that supply-demand dynamic.
Yeah, for sure. And I know you mentioned, the 9 to 5 and trading taking place in certain hours, but I think even Larry Fink mentioned it, that tokenization is the future of finance. And with securities, stocks, bonds, all these things being tokenized, you're going to have 24/7 trading, global markets, no more opening and closing bell. It's just a brave new world.
Yeah, so like I said earlier, that the digital asset concept is the one that, as a broad umbrella, is the one I'm most excited about, and the one where I can see a great deal of improvement. And to me, it's the marginal improvements in transparency, in the immutability of information, and the ability to get timely information, and for all people to have all information at the same time. So simply because I'm able to get access to that information means I'm probably able to price an asset more readily.
Right.
Now that information is being made sort of more broadly available to all people at all times. And so my ability, or the ability for people to view the price of a particular asset, whatever that might be, view the information that surrounds how to price that asset, and then be able to transact on that asset in varying degrees of size without restriction is really where I think it will get interesting, and where that concept of, the original tokenization of assets that was talked about as being the main change, which we haven't really seen in the same way that we've seen the adoption rate of Bitcoin, but I think actually holds the key to a larger opportunity, or as large an opportunity as we've got in the currency space around sort of the asset side of things.
Yeah, for sure. And you folks at Gemini are building products for to meet a lot of that need. I know you guys launched a new derivatives platform. Can you tell us about that and how it's different from other players in the market?
Sure, I'd love to. So yeah, Gemini is obviously quite well known as a spot exchange in the US, and what we're really doing, I wouldn't say it's a watershed, but it's definitely the sort of the start of a shift for Gemini in terms of global expansion. And secondly, that kind of that slight, or not slight, that really major sort of skew in sort of product offering away from the US sort of spot market to a more broader global spot and derivatives opportunity. Product differentiation is an interesting concept when it comes to sort of what ultimately needs to be a fairly standardized event, if you like. If I buy a Bitcoin future on any platform, I'd like it to behave in somewhat a similar way. So, the product itself needs to be, to a certain degree, commoditized in order for it to do exactly what you want it to do. The platform around it is where we're interested in, and the way in which we manage it is where we're interested in that concept of differentiation, where we're interested in areas of innovation. So from our perspective, the fact that we have a regulated spot exchange in Singapore, and we ensure that all of our customers have to become customers of that platform first before we let them onto the derivatives platform. So derivatives by design are a zero-sum game. Ultimately, what someone's long, someone else is short. If someone's making money, someone else has to be losing money. It's really important that you understand where that's coming from. And that the person you're transacting with on the other side is a bona fide counterpart who's done all of the same sort of checks and balances that you've done to become a participant. So it's about making sure that all participants are equal in terms of their standing on the platform. All participants are equal in terms of the information that they see on the platform. So we, for example, have no internal market makers. I would never have traded on a platform where there was even the risk of any participant on that platform having an informational advantage that I didn't have.
Sure.
And that's really key and important for me in terms of being able to say to any institution or any individual customer who comes to the platform is that you're trading with someone else who has exactly the same information you have, who's in exactly the same position to make a trading decision that you are. And I think that's important, and that they've gone through the same process that you have to get onto this platform. Now, we're obviously competing with incumbents who have, with varying degrees of KYC, AML processes, and all the rest of it. I think that changes as regulation becomes, becomes more of a requirement and less of an option. But in reality, yes, it might seem like some friction to get started, but ultimately, once you've gone through that process, you know that everyone else in that platform has done exactly the same thing you have. And that's important, because what we're really talking about is kind of counterparts. And who are my counterparts? My counterparts are my exchange, and my counterparts are the other people on the platform. And I've got to have ultimate trust in both of those. And the irony of what happened with, FTX, for an example, is the sort of the counterpart risk was ultimately the problem. It wasn't a Bitcoin risk, it wasn't a crypto risk. It was a governance and a risk management risk, and ultimately fraud. And you can't stop people who want to commit fraud from committing fraud, if that proves to be the case. And so here we've got a platform whereby we have a product that gives you a relatively high amount of risk, in the sense that, the headline, we're going to give you 100 times leverage, which a lot of people have backed away from. And people will say, that's crazy. Why are you letting people do this? I think it's important to understand what 100 times leverage means, because 100 times leverage as a standalone statement isn't a lot of risk. Because if I say to you, I'll give you 100 times leverage, but only on $1, the most you can lose is $1. It's not a huge amount of risk. That's quite different saying I'll give you 20 times leverage on $20 million. That's way more risky. Relative to 100 on one. So it's a bit like saying, it's reckless to build a car that can break the speed limits. It's what you choose to do with it. And here, actually, we don't allow you to break the speed limits because we set them ourselves and we put you in control of that. Other little things that we've done, I think we're a little bit innovative around our liquidation. We're not trying to make money out of liquidating customers. We desperately hope customers don't get liquidated. We don't want to make any money from that. We just want to ensure the integrity of the platform. But we have additional liquidity process whereby we've taken sort of the insurance fund concept that's actually prevalent in traditional exchanges, as well as a number of the incumbent crypto exchanges. We've taken the concept of the backstop liquidity provider and we've put them together. So you get the best of both worlds. And so we have certain participants on the platform who are there just to provide additional liquidity for liquidation. But we also have the fund that we've put up ourselves for capital to support the same thing. Sure. So we're trying to give customers, even those customers who maybe overstep the risk limits and get themselves, get their positions closed, we're trying to give them as much of their money back as possible in the process of doing so. So we're here to provide a service whereby buyers and sellers can meet and transact. We're not here to try and to take advantage of anyone's decisions around their trading and so on and so forth. So ultimately, we have that process up and running. We have that platform. We're doing it in a regulated, although the product is not regulated itself in Singapore. Singapore itself has regulation. We felt it was important to do it in a jurisdiction, with a strong rule of law and with a highly reputable regulator, even if they're not regulating this product, and putting people through our regulated entity rather than taking it offshore and saying, there's a limited set of rules that apply. So really it's around providing a high quality product against the backdrop of Gemini's already sort of well-established market position of sort of trust, security, and trying to be a sensible voice in the room when it comes to allowing customers to take advantage of opportunities without necessarily overstepping them.
And as far as markets, I know you guys have been expanding to Asia, UK, and so forth. Is this product, you mentioned Singapore, is it available in the UK or other Asian markets as well?
No, so we're currently not available in the UK, the US, or the EU. And that's simply because we don't have the requisite licenses to do that there. We ask for permission before we go ahead and do something. And that's always been the mantra, and that's always the way in which we'll go. We're currently looking at ways in which we can expand. I don't think it'll happen in the US in the short term, given the regulatory environment that's happening there. Yeah. But yeah, we are available, in those countries whereby we're able to provide that service, and where that's an opportunity for customers who want to come to Gemini, have a look at what we're doing. That service is available for them.
And as far as number of assets, obviously you don't have to list all of them out, but is it the full gambit? Bitcoin, Ethereum, I don't know, XRP. I know you guys listed XRP recently, and other assets as well.
Yeah, so we launched a couple of months ago. We've got currently BTC, ETH, and we have Pepe perpetuals launched. We're keen to add more. I'd like us to be a little bit customer led on that, so we have the opportunity to list more. if customers have a strong view on what it is they'd like to see, we're open to that and happy to have a discussion and happy to move, be led by customer demand in that sense. I think, it was an interesting discussion around doing something like Pepe. But the great thing about the derivatives market is you could be you could be part of the Pepe arm or you could not, and you could be totally against it.
Right.
The advantage of the derivative product is you can take both of those views.
Right.
And so, and like I said, for everyone that loves it, someone has to dislike it in order for there to be a long side and a short side. So to me, the opportunity to give people the right product to monetize their view is really what we're here to do. And that's where this derivatives product set sort of expands upon what you really can't do in the spot space.
Right. Yeah, that makes sense. And I love how you put it. He gives you the opportunity. If you don't like it, short it, right? If you're bullish on it.
Exactly. I'm not here for me to personally make a statement about whether I think Pepe is a good buy or a bad buy at this point. But if you have a view on that, we have a platform that allows you to take that view, whichever way it might be. And it allows you to take that view with a great degree of comfort that you're doing on a platform, that's operating to the highest standards possible and doing with the ability to sort of take risk that's managed and do it in a way that allows you to really monetize your viewpoint.
Now, let's talk about XRP just because it's relevant to what's been going on in the entire industry, especially in the United States. Obviously, Ripple got a partial victory in the SEC lawsuit, but XRP itself intrinsically was declared not a security, which is great for a lot of the crypto assets out there because it goes back to the Howey test of it's not the oranges or the orange grows, but rather how the asset is packaged and what investment contract, if there is one there. And I think Gemini, you guys listed XRP for the first time. Tell us about that and the thought process, as well as your thoughts on the implications of that ruling.
Yeah, I'm happy to talk about the implications in the sense that I think what it shows in the US is that there's still a great degree, like there's a lot of conspiracy theories around in the US as to why the current narrative is the way it is. I think that this really shows how confused the US is in general around how to manage this process. And I think when you think about regulation, what is regulation really there for? And one of my personal sort of complaints about regulation as a general statement, not speaking specifically to any particular regulatory body right now, is understanding, are you choosing to regulate this in a way that protects the consumer, which is really your mandate, or are you doing this to protect yourself?
Yeah,
as a regulatory body. So when I look at those jurisdictions that have just said we're blanket banning, that's not protecting your consumer, because those consumers will simply go to offshore unregulated platforms because they want access.
Right.
All you're doing is protecting yourself and saying, well, no, we banned it. So if something goes wrong with this, you can't blame us because we banned it. Rather than saying, let's understand the risks. Let's understand why people want to engage with the product set. Let's understand why there's demand, and then let's work out where the true risk sits for our consumer, and let's put the guardrails in place that we can to ensure that we can allow the consumer to operate in a safe environment as we can provide, rather than just saying, okay, no, you can't do it, and then pushing people to these environments that are truly risky. And risky beyond just the underlying asset that they're trying to engage in, but risky as a platform and all the risks that we sort of talked about with regard to governance and controls and risk management and so on. And I think it's interesting to watch regulation right now and how that dynamic is playing out as there's definite reach going on and sort of people, different regulatory bodies trying to sort of exert reach without necessarily being in a position to do so and a sort of testing it, because I'm not sure that they know. And these rulings that come back, I think, for XRP was great for the industry. I think it was great that there is some checks and balances against regulators who start to overreach. And I think it will be great for people to understand that simply because I stand there and say this is what I think doesn't mean that that's necessarily the law. And so that's where I think it's interesting. Well, from our side, we were never going to, list anything that what we weren't allowed to list. As the rules changed, decisions were made to change it, and they're sort of ongoing, and that's its own separate process within Gemini. And we're just looking forward to sort of a continued move forward with. I think what everyone really wants is greater transparency around regulation,
right,
and greater clarity around regulation. And at the moment, when the regulator itself is making statements that are then proven in a court of law to be untrue, that clarity is not there, and that transparency is not there. But I think it's so complex that to suggest there's a bigger conspiracy theory, I think, is almost sort of, in some ways, is giving too much credit.
Yeah.
Because if you watch the muddled way in which this is playing out, I don't think there's some big Machiavellian plan to sort of, move the chess pieces around. I think it's generally more just ironically, the regulators seems to be playing with law in the same way that often companies play with the regulator, which is we'll push and we'll push and we'll push until we're told to push back, and then we know where the line is. But it shouldn't be like that, because the regulator because that all cascades down and just creates complete turbulence for everyone that's trying to operate within a regulated capacity.
Yeah, it's a great point. And here in the United States, at least, there is a lot of politics. And look, you have the SEC and you have the CFTC. There's so many government divisions, and there's always that battle. They want more power. They want more budget. There's that layer even outside of crypto. So that just makes it just so muddy. But, with the ruling, what we've been seeing here in the United States, at least, is that members of Congress are taking that ruling and say, okay, we got to get legislation through. The judge said such. My bill matches that. We had the Patrick McHenry, Glenn Thompson bill. I think that got approved in the House last week. There's a Lummis Gillibrand bill. I know you're not in the U.S. I don't know how much you've kept up with it, but it seems there's some momentum from this ruling.
Yeah, and I'm not surprised by that. And I think, again, it's interesting that the opinion, sort of the court of public opinion, or not even, it's more that everyone's now said, okay, because of this, here's all of these positives that can come out of it. There wasn't a great, now that you've said that, we need to find a new way to stop this, or we need to find a new way to prevent this, and we're going to find a new way and a new law or a new reason for us to sort of put a pause on what's happening. In many ways, it's a lot of people sort of saying, okay, now that we have that ruling, there's precedent for all these other things that we want to get done. And look, ultimately, the US is the biggest market, is the biggest global market. The US needs to be a leader. And I think that's the one area where, and I know Cameron and Tyler have talked about it, but the one area of sort of genuine disappointment is the US currently finds itself in a position where it has an inability to lead, because it's stuck in this process of sort of infighting and sort of opaqueness around who's trying to do what and for what reasons, rather than just having clarity and transparency, setting out what it's going to allow its customers to do, what it's going to protect them against, why it's doing that, and everyone to say, yeah, we're all on board, and now we can take this whole industry forwards with US. And sort of the exodus that you've seen, from companies, or moreover, the sort of the shift in emphasis away from the US, not just Gemini, Coinbase has done something similar. There's a number of others, is hardly surprising. And I'd like to think that was a little bit of a warning to the US in general, to say, look, if you're going to exclude yourself from these opportunities, then people will vote with their feet and businesses will move away, and that will only be to the detriment of the US consumer and the US investor, not to the benefit. And again, it comes back to that question of what's the regulator doing it for and why. I think that's kind of the crux of the issue for me.
Yeah, absolutely. And what we're seeing is that companies are going on the offensive, suing the regulator, which makes it even more messy. Coinbase is suing the SEC. Grayscale is suing the SEC. I'm curious, and you may not be able to answer this, but is Gemini looking to go on the offensive as well?
So I think that's probably a question for Cameron and Tyler rather than me. Look, I know that they've been reasonably public around their engagement with certain parts of regulation and everything that's gone on in the past. That's more a decision that they'll be looking at in the US. My focus really is building this business out primarily in Asia and ex-US, ex-UK, ex-Europe, and looking at how we can make Gemini a genuine player in the derivative space, and how we can take on, and start to win market share from those platforms who don't necessarily offer the same product that we offer, or offer it on a platform in the way that we offer it. And that's that's going to be my focus, in the short to medium term.
For sure. So on that note, is there anything you can give us a hint on that's on the remainder of 2023, your roadmap? Anything else that you're working on? I know some things are probably under wrap for press releases and things like that, but any hints?
So look, I think for us, obviously, we're going to continue to build out the breadth of the offering on the perpetuals product. We've made it reasonably public that our roadmap is to get us all the way to the option space, through perpetuals, dated futures, and options. And that's where we're going to be heading for the rest of this year and next year. So we have a committed sort of roadmap to wanting to offer a genuine crypto derivatives ecosystem that you can interact in, and that's really where we're aiming for. I think where we have some opportunity to be relatively unique is we have our own regulated stablecoin that gives us some unique opportunity around capital efficiency and reducing the cost of capital, or even paying returns on capital.
So you're talking about GUSD?
Yeah.
Okay, got it. Yeah.
So the Gemini derivatives platform is a GUSD native platform. However, we're not GUSD exclusive. So you can bring US dollars, you can bring USDC, and we will convert it to GUSD one for one, seamlessly, no charge, instantaneously, on the way in and on the way out. So for a customer who's used to using USDC on another platform, they can bring their USDC to Gemini. We'll convert it to GUSD instantaneously and for free, one for one. You can trade with it on Gemini, and then you can take that GUSD off as USD or USDC totally seamlessly again. So we use GUSD as a settlement coin within the platform, but we don't restrict you from moving GUSD in and out. You can use US dollars, you can use USDC. However, once you're holding GUSD, if we're forcing you to hold GUSD, there's an interesting idea, about what we can do to make that more attractive. You have to hold it as collateral. It's being used as collateral, but maybe we can still reward you for doing that. And so looking at returns as not just the P&L I make from where I bought something and where I sold it, or vice versa, but what's the return on the capital I put on the platform? And that's sort of what we're looking at. So, if it costs me a huge amount of money to be on the platform, and money is less cheap than it used to be, as everyone who's borrowed any in the last few years is now starting to realize, to continue to do so has a much higher cost of capital to it. So to sit there, a few years ago and put a load of money into, an independent stable coin and use that to trade, that money, for as long as that money is sat there and not sat earning any kind of return, that's an opportunity cost lost. And so we want to sort of look at how we can redress that balance, which is somewhat independent of a derivative product, but it talks to the platform that the derivatives products are on. And that's really where we're looking to try and differentiate ourselves.
Yeah, that absolutely makes sense. I have to ask about the Genesis Trading Gemini Earn situation. I know a lot of folks want to know if there are any updates there. And I know there's been a lot of public statements made by Tyler and Cameron and open letters and things like that. Anything new there? And does that affect the work that you're doing?
So it doesn't affect what we're doing. I appreciate that it's a concern for a number of Gemini customers, and Cameron and Tyler are doing their best to sort of work through that process, and they keep people as up to date as they can, as they're legally allowed to do so. From our perspective, it doesn't. What we're really looking at is how we can get customers outside of the US, in the regions that we're able to come and look at the platform and trade and really work towards that. I think, there's a multitude of ongoing and interwoven sort of issues being resolved, post the fallout, and actually going all the way back to Three Arrows and everything else that's sort of happened in the last 18 months that will take some time to unwind. And I appreciate that's a frustration for people. And there's nothing but desire on the Gemini side to get that resolved as quickly as possible.
So Bitcoin has been rallying. The halving is next year, and it seems like the 4-year cycles are playing out again. Not asking for a price prediction, but I'm curious your thoughts on the market cycles playing out, and could we see a new all-time high potentially in 2025?
So I'm not as strong a subscriber to the sort of cyclical nature of Bitcoin as other people. That's simply because for me, it's still too immature to truly be able to run on a cycle and on a sort of an established market cycle. And its correlation to other events and other markets hasn't been strongly established enough to genuinely say that that's true. So I think if you take 4 years ago and look at all of the metrics around Bitcoin, for example, and look at all of the engagement around it and compare it to now, we're in a vastly different place, and we will be in another 2 years' time. And so for me, the incremental evidence points towards, like we said, on a daily basis. I think Uber was today or yesterday, people talking about not just the investment opportunity, but the utility of cryptocurrencies and of Bitcoin in particular in that case. And looking at how that is changing and how that changes that supply-demand dynamic. There's always going to be bumps in the road. I think the interesting couple of things for the past few months is or particularly since the turn of the year, is the drop in volatility around prices. It looks like we're in a bit of a holding pattern from just trading perspective, but the news flow is kind of building. And every incremental piece of news flow is generally skewed towards the positive. How that plays out in time, do I think Bitcoin will be higher or lower in 2025? Absolutely. I think it'll be higher. Do I think it'll be lower before we get there? Probably. I realize I'm not saying anything that's going to make anyone a lot of money, but it's not a crazy prediction, and it's probably not very helpful for anyone's trading strategy. But at the same time, the technical analysis side for me, I think the market is a little bit too mature to really pin my hopes on saying, we're in a sort of cycle. And like I said, the correlations to the rest of the market. Also, the rest of the economy is in a very different state than it's ever previously been for most people investing. The interest rate cycle that we're currently going through is, for a whole demographic of investors, is something they've never experienced before. And so in that sense, we're going to go through some very different times and some very different psychology around, the true value of things. And that could be, what you're doing with the S&P or the NASDAQ or what you're doing with your regular currencies or what you're doing with your cryptocurrencies. The key sort of change now is cryptocurrencies are becoming more and more part of everyone's investment portfolio. And that will continue to grow, and that will continue to permeate sort of the investing public. And so there will always be, in my mind, this skew towards the supply-demand dynamic, independent of everything else that could happen and should happen with sort of, the general use case and adoption of the product itself. Yeah.
And to your point, there has been a high correlation between Bitcoin and the stock market. Some folks don't like to hear that, but it's, you look at those charts and they align. And then let's see if we get the Bitcoin spot ETF approved, because that could open up a lot of capital coming into the market. I want to get your thoughts on WorldCoin. if you've been following that, Sam Altman's new AI dystopian orb, scan your eye stuff. I understand the problem they're trying to solve, but it seems a bit dystopian. What are your thoughts?
I like people thinking big. So in that sense, they've gone big. This is a good swing for the fences. I think if they can achieve some of what they want to achieve and do it in a way that is genuinely positive for the demographic they're really looking to empower, I think it can be a good thing. obviously there's concerns over the information that is being gathered, the way, who they're going after, and so on and so forth. My sort of, despite what's happened in the crypto market, over the last couple of years, my general view is to always to see the positives in people, and expectations should be positive, and that people are genuinely doing things for the right reasons. And so in that sense, I like the concept. I like the idea. I think it's a real swing for the fences. And, maybe it's one of those where we'll aim here, but even if we get here, that's going to be a win for all of those people. Right. So look, I think at the end of the day, anything that gets people talking about it and understanding the ability to scale these sorts of things. I mean, one of the great things about blockchain technology is your ability to scale. And technology in general, your ability to reach and scale people, and the incremental cost of adding another user or getting someone else on the platform is so small that sort of just getting people's head around the concepts that have become available and that you can think about, even if you might not necessarily get there in the time frame that they're talking about. I think that's interesting for the market, and that's interesting for people like my parents who still think, that what I'm doing is crazy and doesn't make any sense and all the rest of it. But just to get them to see real world applications of similar things, I think that's a useful, like I said, for people taking that journey from skeptic to acceptance. They often need something that's tangible. I'm not saying WorldCoin's particularly tangible, but the concepts that they're talking about will resonate with people, even if they can't get that.
Yeah, for sure. I mean, to your point, they're certainly swinging for the fences, and they're trying to solve some real world issues. Part of it, UBI, universal basic income, as technology becomes more prominent. But we'll see where it goes. I think they got some hurdles to certainly get through, and we'll see where things go. Like you said, we got to give it time. All right. I got some wrap-up questions here for you. First is, if you could create your own metaverse, what would the theme be? Where would Neil go to?
I'm into festivals, music, concerts, that sort of thing. So anything that can give me some of that experience, and some of that ability to share that experience with people, I think is interesting. I know it's not particularly new concept, but that for me is definitely the part where I'm interested.
And I got some rapid fire questions here for you. Favorite food?
Anything with chili in it. Mexican, Indian, anything with some spice.
Favorite musician or band?
Like, I'm a kid of the 90s in the UK, so I've got to say Oasis.
Oh yeah, I love Oasis. Favorite movie?
You can't get past the original Top Gun. It's what inspired me to become an aeronautical engineer.
That's right. Well, I'm assuming you saw Maverick, right? Top Gun Maverick.
I did. He's not around the moment. I have a dog called Maverick. It's an ironic name if you've met my dog, but yeah, I have seen Maverick, and the nod to everything in the original pleased me no end.
And favorite book?
Anything I read mainly non-fiction. I think something that fits in that genre that is probably a bit more lighthearted is This Is Gonna Hurt by Adam Kay.
And when you're not working at Gemini, what are you doing for fun as a hobby?
So I live a 5-minute walk to Bondi Beach. So every day I go surf. I get in surf. I have a paddle out. Hopefully I see some dolphins. Hopefully I catch some waves. But if nothing else, I enjoy the serenity.
Oh, that's awesome. Neil, a pleasure chatting with you. I would love to have you back on in the future as things progress, and excited to see the new updates around Gemini. But thank you for joining me.
And thanks for the time.